Hi and good day, doctor. I'm SARAVANAN and my metric number is 285778. Basically, we are from Group 1. Today, we delve into the dynamic landscape of the banking industry in Indonesia, a vital component of the Indonesian economy. Country background. Indonesia's financial system provides important financial service to individual, businesses, and the government, supporting the nation's economy. This service and financial stability depend on the Bank of Indonesia's regulated banking industry. Commercial bank. Commercial bank has a handover of 90% of the Indonesian banking market. With over 107 commercial bank and 32,500 bank office, they offer deposit, account, loan, credit card, and wealth management solution. Islamic banking. Indonesia has the world's biggest Muslim population, although Islamic banking penetration is just 7% as of December 2021. Brunei and Malaysia have 30 to 50% adoption rate. Through merger, PT Bank Syariah Indonesia (TBK) became Indonesia's largest bank by asset. Digital banking. Indonesia lead digital banking usage. Most Indonesians use digital payment and media due to the young and democratic population. Electronic wallet are expected to reach 25 billion USD by 2023, and the government has budgeted over 1 trillion Indonesian rupiah for digital activities. Next, about the banking industry in Indonesia. Indonesia bank confront regulatory compliance, high competitiveness, and limited financial inclusion. The government national non-cash movement aim to minimize cash reliance and encourage alternate payment alternative. Financial service accessibility and efficiency has also been improved. Transformation of the bank's central financial system. In the early 1980s, Indonesia embarked on the transformation of its financial system. Stringent and regulation were replaced by the indirect money control, granting state bank more autonomy. History of the Bank Indonesia. After the Dutch colonial bank, Bank Indonesia became Indonesia's central bank in 1953. Bank Indonesia has changed its organizational structure, monetary policy, and regulatory framework. Deposit insurance and prudential reform in the 1980s and the 1990s improved the banking industry. Bank Indonesia's roles today. Bank Indonesia adapted economic and financial changes. The central bank prioritized macro stability, regulatory reform, and financial inclusion. Bank Indonesia used technology to boost efficiency and accessibility. In conclusion, Indonesian banking industry drives economic growth by providing several financial services. This sector will develop and modernize with the government banking and financial inclusion program. Thank you. That's all from me about the introduction of the Indonesia banking industry.
Hi, my name is AINA AMIRA binti Muhammad RADHAZLI. My metric number 280341. Today, I will share about structure of financial system in Indonesia. Central Bank Indonesia is in charge of administering the country currency, ensuring price stability, and overseeing the banking industry. Second, banking sector. Banking sector in Indonesia have three types. Firstly, Sharia compliant bank. It is Islamic banking with Sharia law. Next, commercial bank. And thirdly, rural bank. Rural bank is rural credit institution dedicated to offering monetary service including farmer and small enterprise. Next structure is capital market. Capital market is a venue for raising long-term money and investing in a variety of financial products. Have three types. It is bond market, Indonesia Stock Exchange (IDX), and derivative market. Next structure is regulatory and supervisory authority. It is ensuring the stability and integrity of the financial system in Indonesia. For payment system in Indonesia is use mobile banking and electronic funds transfer. Furthermore, for financial inclusion initiative is to give underserved group of society access to financial service. Lastly, for structure of financial system in Indonesia is no-bank financial institution. They offer businesses and individuals specialized financial service. That's all from me. Thank you.
Good morning, doctor. My name is Jujinta, metric number 2XCF45. Now, I will continue to present sector of banking system. The Indonesia banking architecture is a regulatory framework established by Bank Indonesia to shape the country banking system and facilitate its growth over the next 5 to 10 years. Indonesia has a diverse banking landscape consisting of private banks, state-owned bank, regional bank, and various other types of banks. Indonesia is also actively promoting the goal of Islamic banking and aims to increase the percentage of total banking assets held by Islamic financial institutions to over 5%. Additionally, the Indonesia Export Finance Agency plays a crucial role in providing affordable export finance, consultancy service, and other export-related assistance. Now we move to the type of bank in Indonesia. The first is Bank Mandiri. Bank Mandiri is a national bank that primarily serves corporate clients, offering operational banking service. And second is Bank Negara Indonesia. Bank Negara Indonesia is a state-owned bank in Indonesia. It offers a range of financial services through its subsidiary. And third is Bank Rakyat Indonesia. Bank Rakyat Indonesia specializes in small-scale and microfinance lending to retail clients. And the last is Bank Lembaga Pensiunan Nasional. BTPN is a commercial bank with a focus on foreign exchange service. This is for my part. Thank you.
Now I will talk about market penetration. The Association of Southeast Asian Nations counts Malaysia and Indonesia as significant members, and the two countries have close economic connections. With a population of over 270 million, Indonesia presents a tremendous opportunity for Malaysian banks to increase their presence in the area. Malaysian banks have been eyeing the Indonesian market for years. There are benefits and drawbacks to Malaysian banks joining the Indonesian financial system. There are few pros and cons, and I will explain 4 pros and 4 cons of market penetration between Malaysia and Indonesia. The first one is similarities in banking system. We know that both Malaysia and Indonesia have conventional and Islamic banking, hence their banking systems are comparable. The similarities of the two countries' financial systems may make it easier for Malaysian banks to enter the Indonesian market. The second one is growing economy. The economy of Indonesia have been expanding gradually in recent years, and it is anticipated that this trend will continue. Despite the pandemic effect, Indonesian gross domestic product (GDP) is predicted to expand by 5.9% in 2021 by the International Monetary Fund. This offers Malaysian banks a chance to enter the market and take advantage of the rising demand for financial service. The third one is ASEAN Economic Community (AEC). With the AEC now in place, ASEAN economic connectivity has expanded, making it simpler for Malaysian banks to conduct business in Indonesia. This is due to the lower trade and investment restrictions within the region. The last one is proximity. Geographically, we know that Malaysia and Indonesia are neighbors, making it simpler for Malaysian banks to establish physical presence there. The proximity between the two nations may also contribute to increased trust. For market penetration cons, the first one is strong competition. The Indonesian banking industry is dominated by domestic banks with a significant market presence. This makes market penetration problematic for foreign banks, including Malaysian banks. The second one is regulatory challenges. Malaysian banks may find it difficult to establish a presence in Indonesia due to the country's strict regulation regarding foreign bank ownership. In addition, the capital requirements are strict, which can be a barrier to entry for foreign banks. The third one is cultural differences. We know that both Indonesia and Malaysia have different cultures and language, making it difficult for Malaysian banks to comprehend the needs and preferences of Indonesian customers. The last one is political risk. Indonesia right now is unstable in politics that will cause increases the risk for foreign investors. Due to this risk, Malaysian institutions may be hesitant to enter the market. According to a report by KPMG, Malaysian banks have expanded their presence in Indonesia over the past few years, but they face challenges due to the environment's competitiveness and regulatory restrictions. KPMG recommends in its report that Malaysian banks concentrate on forming strategic partnerships with local banks and financial institutions in order to surmount these obstacles. So to summarize, there are both advantage and disadvantage to Malaysian banks entering the Indonesian financial system, but their market penetration is conceivable. The similarities between Malaysian and Indonesian banking system and Indonesia's expanding economic present opportunity for Malaysian banks. However, fierce competition, Regulatory hurdles, cultural differences, and political hazards may present obstacles. In the end, the success of Malaysia's bank in Indonesia will depend on their capacity to overcome these obstacles and provide innovative, customer-centric financial services. That's all from me. Thank you.
Doctor, I'm DANUSH MOGAN. My metric number is 287845. Today, I want to explain about the risks and challenges that having by Indonesia financial market. So, Indonesia is a rapidly growing economy with a large population, making it an attractive market for foreign banks. However, there are a number of risks and challenges that Malaysia banks must consider before entering the Indonesia market. The first one will be the rivals from the regional banks. One of the biggest challenges is the competition from the regional banks. Indonesia has a number of the well-established Islamic banks, which are the popular with the Muslim consumers. Malaysia banks will need to offer a competitive product and the services in order to succeed in the market. So the second one will be the regulatory environment. Another challenge is the complex regulatory environment in Indonesia. Foreign banks must be comply with a number of the regulations, which can be time-consuming and expensive. The third one will be the culture variations. So Indonesia and Malaysia have a different cultures, which can make it difficult for the Malaysia banks to understand and meet the needs of the Indonesia consumers. For the example, the official language of the Indonesia is a Bahasa Indonesia, which is different from the Malay language used in the Malaysia. This can make it difficult for Malaysia banks to interact with the Indonesia client. So despite the challenges, there are also a number of the opportunities for the Malaysia banks in Indonesia. The country has a young and growing population which is increasingly using digital banking services. Malaysia banks that can offer innovation products and services to this market have the potential to succeed. So that's all for me. Thank you.